We got some fun stuff for you here.
Okay, 3, 2, let's go.
I'd like to welcome my guests, Francisco and Silverback64 from Twitter. Check them out on Twitter. What's up? What's up, Ogape, Ed, JH? How you guys doing? Morning, good evening. What's up, Ronnie, Margaret, Rennie, Glizzy? Ape Nation in the house. Got here fast.
Okay, 3, 2, let's go.
What's up, BZ, AM7? Cheers. What's up, M3? Josh? How's everybody? Joe Zikovich is hanging out in Vegas, brother. I love that. That's great. Welcome, Zikovich. Sorry if I pronounced that wrong, brother. I should know better.
Oh, great.
You're an original, aren't you?
Cowboy.
We got just putting this out on Twitter right now, everybody. I'm just sharing it. The link doesn't share out, unfortunately, on Streamlabs. I wish it did. Smoke them if you got them. Drink them if you got them. Otherwise, have a glass of mayo. Come on, man. Ken Griffin says it's the best. He likes drinking mayo and throwing bedposts at women.
Oh, great.
Would that be considered libel? No, because it was in his divorce proceeding. Yeah.
You're an original, aren't you?
Cowboy.
His wife's the one that said that, actually. It's pretty fucked up, huh? And your own fucking wife tells the world that your husband, or ex-husband, should I say,
Great.
threw a goddamn bedpost at you. That's pathetic. What a sad excuse for a man.
Bounty cutter.
Give me 1 second, folks. Switch screens here for you. Eric, Circle, Tyrese.
Great.
Ooh, you guys are in for some fun. We got some debt ceiling crisis on our hands.
Bounty cutter.
I want my fucking money.
Don't you fucking forget it.
Money. Money.
Don't you fucking forget it. I want my goddamn money. I'll be waiting for that whistleblower money. I don't care how rich I am from this.
I want my fucking money.
I want my fucking money, man. Jeez. All right, now that we had some fun, busted out a couple tweets, then we'll get started here. What's going on, Francisco? What's going on, Silverback? You guys still with me?
Yeah, man.
Yeah, man.
Solid. Solid, man. Thanks for helping me put this together. You guys have been very, very helpful with all these details. For those of you that are unaware, this is the kind of crap. Let me get that out of here. I am following along with the chat, so excuse me there. This is the bubble map. Well, would you look at that? The many paths to raise the debt ceiling. What do you guys notice right at the very beginning? Is there anything that strikes a bell? Because we're not off to a great start there, you know? Looks like Larry Garcia says, got to take off parental restrictions on YouTube to get alerts now. All right. All right.
Wow.
That's interesting. Make sure you turn off parental restrictions if you want to get alerts, everybody. Turn off parental restrictions on YouTube to get alerts. Not just from me, but from anybody. So, live and learn. Thank you, brother, for that information. I appreciate that, Larry. Mr. Garcia, good looking out. So, Francisco, these, sorry, brother, the Democrats and progressives are looking for a $5.5 trillion state welfare expansion package. Know anything about that, brother?
What was it? Can you repeat it?
The Democrats and progressives are looking for a $5.5 trillion state welfare expansion package. Do you know anything about that, such as the money that they're looking to give people for eviction moratorium and such?
Nah, basically, that was the initial proposal, but they knew that that would not have the support from the moderates in the Senate, so they lowered it to 3.5 trillion. That's what it was.
Yep.
Because they initially want to do 5 point something trillion, but then they lowered to 3.5 because Manchin and Sinema won't support it.
So we got Republicans' refusal to go along with the Democrats and progressives' $5.5 trillion packages. Right. And then congressional negotiators are seeking to cut the overall size of this 10-year package in coordination with Biden to between 1.9 and 2.3 trillion. So they're looking to keep it at or around 2 trillion. You know?
Yep.
And here's the thing is, as long as progressives refuse that, we kind of go around in a vicious circle there. But before they even start talking about that, they've got to get around to this point. There's a $3.5 trillion infrastructure bill. All right. But here's the thing is, they've got to agree to fund the government, pass a $3.5 trillion infrastructure bill, and then raise the debt ceiling. When you've got a $3.5 trillion infrastructure bill, and only 10% of it is related to actual infrastructure, the majority of it being a bunch of Green New Deal and other bullshit, crypto regulations included, there's going to be a lot of arguments about this. You know, there's three ways that this can go. Whoops, should not have moved that. Number one, in order for this $3.5 trillion infrastructure bill to be passed, before we can start talking about the debt ceiling, 50 Democrats and progressives plus 10 Republicans have to vote to proceed. But it's pretty clear already that from all Republicans in the House of Representatives voting against raising the debt ceiling just about a week ago until extending it through December 3rd, it was passed only because of the Democrats' support. At the same time, McConnell and Republicans got slapped in the face. What do you think about Schumer's speech, brother?
It was stupid.
That's it? It was a stupid? I think it was more than just a stupid speech.
If I can say. It was, I know he was, with the whole range of, having to negotiate something that they have always done smoothly, because the debt ceiling, raising the debt ceiling has never been this much of a trouble.
That's right.
But now it was really a big stress, and obviously Schumer reaction and speech reflect that. But you can say that if you need them again in 3 months, in a month and a half.
Yeah, exactly. A month and a half. We got about 6 weeks left now?
December 3, we're October 15, month and a half.
So
yeah, six weeks.
We've established that McConnell and Republicans will not support the debt ceiling increase. You heard what Ted Cruz was up to. You've heard that Congressman Round and Blunt were extremely pissed off and offended over what happened after that fact that they were the last two to get whipped into shape by McConnell. And because of this, they're going to have to go to reconciliation, and it takes a really, really long time. It usually takes a minimum of 2 weeks, and that's just to raise the debt ceiling, that's just to use the reconciliation process to pass this $3.5 trillion infrastructure bill. Before they're able to start talking about increasing the debt ceiling. All right. And the amount of time that we've got, you got to take into account for weekends and Thanksgiving holiday. Congress has 30 days in session as of, October 18th, including October 18th, Congress will have 30 days actually in session. All right. Now, the thing with reconciliation, even if they manage to get this done within a certain amount of time, within this 11 weeks, to pass this $3.5 trillion infrastructure bill, Republicans can use amendments on the floor to stall, to make changes, just to cause a general filibuster, to pretty much tell them exactly what they can or can't spend this money on and try to send it for a vote again. Can you guys elaborate on that at all?
What part again?
Damn it, Francisco, how high are you?
No, I can. No, for real. The connection is kind of bad. That's why.
Republicans can use floor amendments to stall and cause a filibuster.
Yeah, basically, right? They can force the closure. If you don't get the unanimous consent, they can force a vote, and that's what basically it is. So if you don't get the 10 votes, the bill goes to the trash, unless the Senate majority has the chance to do, he votes, but then he can change his vote. If he changes his vote, then he can reconsider the motion in the future. He can bring the voting again in, later in the week. He can do that. But
basically all that does is that pushes us into restarting the whole
going
thing
back
in its
around.
entirety again. Right.
So it starts the whole process over again?
But he only gets one chance.
So a filibuster would cause measures to be passed through the House for voting again. So if they make changes in floor amendments, all of a sudden the reconciliation process that they had is now being filibustered, and it has to go all the way back around through the House of Representatives once again to start the process.
Yeah, if Schumer doesn't change his vote, he got one attempt. Right. He can change the vote once, and then he can bring the motion again in the future if he doesn't get the 10 votes. Now,
the Democrats can nuke the filibuster, right?
Yeah.
And what has to happen for that to work?
Manchin and Sinema both have to support all 50 plus Kamala Harris.
Manchin,
and Cinema, and
Cinema.
then Kamala Harris has a
and
tiebreaker.
Kamala Harris has to agree to it.
Yeah.
Okay. So we already know that Manchin won't support it, right?
Yeah.
I mean, let's be honest. What
really
party
him.
is he on? You know, what party is he with?
He's a
He'd be
Democrat.
considered yeah, he's a dino.
He's a Republican, but he likes to basically work with Democrats, but he's a
So
Republican.
he's a trans.
Yeah,
He's kind of a
yeah,
tranny.
he's a dino. He's a Democrat in name only. Just
Gotcha.
like there's rhinos also, Republican in
Gotcha.
name only. Yeah.
So that would bring us right back around to the fact that Manchin won't support a filibuster, and all Republicans in the House of Representatives voted against raising the debt ceiling previously. They will do so again, showing support for McConnell and Republicans. That gives us another option. What is the next option? Unanimous consent by all Republicans. Come on, guys. What do you think is going to happen, Francisco? Silverback, talk to me.
Not a chance.
Ted Cruz, I object.
Say it again, brother.
Right.
For the people in the back.
Ted Cruz will always object, so that's not happening.
Ted Cruz, he was born for this fucking shit, wasn't
Yes, he was.
It's like I have to fuck America.
I got news for you though. After Schumer's comment, it's not just Cruz.
he? Oh my
I mean,
God, there's so many.
About Pandora's box. Yeah.
Keep going, Silverback. I didn't mean to cut you off, brother.
Oh no. I said there's going to be a lot of Republicans oppose it at this point, just because of Schumer's faux pas, right?
Faux pas is an understatement.
Yeah, well, I'm trying to be somewhat.
Yeah,
He fucked it up, so it is what it is. It's when you slap the hand that's feeding you. I mean, you can see the thing that will tell you exactly how bad it was is to look at his Democratic colleagues that were behind him during the televisation of this and see their reactions. They knew it was a massive screw up immediately. I think Manchin had his hands in his face in his hands.
Yeah, he absolutely did. He had his fucking face down. He was so pissed. He was probably turning colors. God knows what he was muttering to himself. For those of you that are unaware, the debt ceiling has not changed. The crisis has been kicked to December 3rd. The United States Treasury was given $480 billion. The government spends $502 billion a month. So that means jack shit at the end of the day. Okay? There's only a couple paths to get to where we need to be. All right? We have to raise the debt ceiling, fund the government, pass infrastructure bills of $3.5 trillion, and state welfare packages. You have to take into account for weekends and Thanksgiving holidays and everything that's going on within Congress and the House right now. Also, there's a 13-day international climate conference at the United Nations in which many congressmen are going to visit. They may not be there for 13 days, but aside from that, there will also be 13-day international climate conference by the United Nations that will be taking up a lot of these guys' time. So unanimous consent by all Republicans. We go straight back to McConnell and Republicans will not support the debt ceiling. Reconciliation, not enough time. Republicans can filibuster, and a filibuster would bring us right back here to all Republicans in the House would be voting about it again, right? So that's just a no-go right there. And the third option that we've got, quite simply, to pass this $3.5 trillion infrastructure bill, of which only 10% is actually related to infrastructure, is a majority in the House and 50 Democrats in the Senate, plus Kamala Harris's tiebreaker vote. Tell me about how this works, Francisco.
Basically, they're working on two reconciliation packages. So
Right.
if you wanna, you can
True.
raise the debt ceiling doing that procedure, but then that's a problem because Democrats don't want to raise the debt ceiling using reconciliation because that will be partisan, and that has always been done by partisan. So that can create political conflicts in the future because you won't recognize the president's debt, and that's a problem. So
Well, it's especially a problem during midterms because if they look like it'll make them look, that's going to be an issue.
yeah, and it's gonna be, and if they want to approve the package, the infrastructure package has to do by it has to be reconciliation because Republicans won't support that spending.
Right. And you can even go back here and put it right back up here that the that they're trying to cut it to 1.9 to 2.3 trillion. And what happens? That they're not going to be able to pass that through reconciliation. We can have a majority in the House plus a 50, and 50 Democrats in the Senate plus Kamala Harris's vote. That's a lot of people to agree to vote on something that they've been fighting about heavily. The reconciliation process, again, takes a very long time. They've only got 30 days as of now, not including for the time that they're going to spend the International Climate Conference.
And there's one more thing that we haven't talked. Remember the infrastructure bill? It's due by the end of October. If they don't vote on that, the bill is trash.
Which one?
The infrastructure bill.
Which one?
The first one, the 1.2, the bipartisan one.
Yeah, that's why I'm calling it a $5.5 trillion bill.
If they don't approve because the progressives are holding it hostage, by October 30, the bill is trash. Remember they extend that thing by 30 days in the Congress? Those
are 2 trills, man. Those are 2. We've got...
No. The bipartisan bill, remember?
Yes. You're talking about the other one. The 1.9 trillion? Correct.
The progressives say we're not passing it unless we have the reconciliation attached. And then the deadline came in. So Congress extend that thing for 30 days so it doesn't get trashed.
Yes, that's correct.
Yeah, and that's the issue. We're already October 17. That bill is due by October 30. Otherwise, it's trash.
Which bill is that? The 1.9?
Yeah, that's the 1.2, 1.3, something like that. So it's a lot of pressure right now on the. It's a big mess.
In late July, Democrats introduced a $322 billion plan to bolster low-income housing as part of the $3.5 trillion social spending plan. So part of this $3.5 trillion social spending that is being argued against by the Republicans is, $322 billion is for lower-income housing, Section 8, etc. Aside from that, there's a $200 billion that would go towards the country's poorest tenants, which would allow 750,000 more households in American households to participate in a program, aka Section 8. Okay, affordable housing advocates saw it as a once-in-a-generation windfall, but that does not look like it's going to happen. Okay, congressional negotiators are seeking to cut the overall size of the 10-year package in coordination with the White House to between $1.9 to $2.3 trillion. Housing is just one of several high-priced priorities on the chopping block. Okay, so it's not just that they're cutting money; it's where the money's being cut. That's very important. Okay, because a lot of that has to do with healthcare and increased educational access. Okay, so they're trying to spend money in many different ways to help the economy, which you've got to give them credit for at least trying to help. But at the same point, how much spending, in contrast, how much spending is too much spending? What is fiscally responsible? And to agree to that between so many people is almost impossible.
Yeah, it's hard.
I know on the education thing also, if I'm not mistaken, yesterday or today, it was pretty much announced that I think they were discussing 2 years of community college being paid for, then that's now out the door.
Yep, community college is gone.
And there is another thing. I was reading because I don't know if you guys know that there is this climate conference thing.
It's a 13-day international climate conference, and senators have to go, congressmen have to go there, so they're going to be wasting more time. There's going to be less than 30 days for them.
Exactly. And
Well,
there is another
you
thing.
kind of look like an ass if you have an infrastructure package that's loaded with new Green Deal stuff and you don't go to a climate accord, right?
Yes.
That's an issue.
That's a big problem.
No, and not only that, the United States has compromised to by 2030 reduce 50% of their CO emissions, but that will be impossible if they don't approve the reconciliation package with the all green investment. So, and Manchin won't support it because remember he received donations from coal industry.
That's true. He gets a lot of donations from, and specifically states in the northeast of America, you know, that highly depend on the coal industry. They have immediately disagreed with that stuff and made a good amount of donations and contributions.
And he's
I should
also
say.
owner of well, not him, but his son. But he received dividends from those companies.
Yes, sir.
It's a lot of conflict of interest.
So yeah, it looks like the mind map keeps growing here slowly, but as you guys can see, the paths to raising the debt ceiling are quite minimal at this point. Okay, and they all lead right back around, right back around where we came from. Yes, I'd like to thank Kenna and the Bull House for all their help as well. Please check them out. Hi, Kenna. Welcome, hon. Appreciate you coming.
Hi, I just wanted to say I'm very proud of the mind map.
Thank you. I had to go in there and start cranking one out. I'm like, man, I have to figure out a better way to display this information for people. And here comes along Kenna with a beautiful solution. So thank you.
You're welcome. I just wanted to hop in and say I'm very proud.
Oh, feel free to hang out.
Okay.
What are your thoughts on this? Have you been watching so far? Because like we got three options, three ways to proceed, and they're all fucking dead ends, roundabouts.
They are. I just tuned in. I just got sat on my computer. But yeah, no, they're all dead ends because they're all just stuck in the mud. So I mean, whatever.
Yeah.
Hey guys.
I agree. So for those, go ahead. It's all good. What do you all make of Trump telling people to vote for Democrats or stay at home for 2022 election? I don't know. This isn't about politics necessarily. This is about the issue at hand right here. So you'll hear us making fun of Democrats, Republicans, progressives, and everybody in between because they're a fucking joke. The whole fucking lot of them, you know. And the ones that mean well can't get anything done because of these issues where we're constantly running in circles. Paths to raise the debt ceiling. Okay. Democrats and progressives are looking for a $5.5 trillion state and welfare expansion package. Republicans are refusing, trying to get it, along with the White House by Biden, are trying to get it down to $1.9 trillion to $2.3 trillion. Progressives are refusing, so we're going around in circles. There's a $3.5 trillion infrastructure bill, of which only 10% is related to infrastructure. The rest is related to, cryptocurrency regulations, the way that we're spending our money, or should I say not spending our money. And we've got three different ways to proceed on this bill. 50 Democrats and progressives plus 10 Republicans have to vote to proceed. Right? But again, McConnell and Republicans will not support the debt ceiling increases or a unanimous consent by all Republicans. Again, McConnell and Republicans will not support the debt ceiling, especially Ted fucking Cruz. You could have a majority in the House of Representatives and 50 Democrats in the Senate. Oh, I'm sorry, I meant a majority in the House and 50 Democrats in the Senate, plus Kamala Harris's tiebreaker vote. But again, reconciliation takes a very long time. It's usually a minimum of 2-week process. We saw Schumer was arguing way back in July that 11 weeks wasn't enough to raise the debt ceiling and to get all this taken care of. What makes them think that they're going to get it done in 6 weeks, let alone when they have less than 30 days in session, not including time spent at Climate Conference of the United Nations, which is 13 days long? Republicans can use the floor amendments to stall and cause a filibuster. A filibuster would cause measures to be pass through the House for voting yet again. Democrats can potentially nuke the filibuster, but again, all 50 Democrats must support it, and we know that Manchin won't. All right? Aside, all Republicans in the House of Representatives voted against raising the debt ceiling previously. So again, we're going around in a vicious circle, no matter where we're at, until something changes up here. And it's got to happen fast. They don't have time to play around, because after they pass this $3.5 trillion infrastructure package bill, they still have to figure out how much to raise the debt ceiling and for how long.
Don't forget Evergrande and all that too.
Oh, there's a lot of things that we're not even going to bring up here, other than think about everything that's happening globally and what it would cost to the stock market if the debt ceiling issue does occur. It would cause... We don't even have to default on the debt here. We just have to come close to December 3rd without an agreement on the $3.5 trillion infrastructure package, the other $1.5 trillion infrastructure package that they're working on for the states. Or I should call that a state welfare package. And then raising the debt ceiling. We got 3 key issues that all need to be addressed at the same time. And we can't get to the second issues before they pass the $3.5 trillion infrastructure bill. They've already, progressives have already stated this, Republicans and Democrats have as well. So what it means at the end of the day, that even if we come close to December 3rd and the government doesn't default, the stock market will take a huge, massive hit as far as financial losses for the majority retail investors, because they're usually the last ones to pull out of the market when things do occur. If a debt ceiling is not raised and the government does default on its debt for the very first time in history, which I believe will be the case, we will have our credit downgraded to double-D, which stands for definite defaults, and Americans will lose a lot of money on the stock market and their pensions, their 401ks, and a lot of other things, such as real estate values as well, which is imminent at this point.
Well, boss, even that being said, the closer we come to that deadline, even if for some unforeseen reason, say they were able to put pressure on Manchin. Let's say they did nuke the filibuster, but the closer we come to that end date, they could still derate our, take us down, a couple of levels. I think they did that in like 2013, didn't they?
Yep, we don't have to default for them to downgrade our debt. I mean, to downgrade America's creditworthiness. It was downgraded twice in 2013 to, I believe, A-, if I recall. Oh no, from AAA it went to good amount of information here, but I can't recall the exact one right now. But it was downgraded twice, yes.
And so even if it's downgraded marginally, it still can be a market impact, and that could be a precursor to another catalyst. And we're still waiting on the whole crap with Evergrande. I think there's something happening on Monday on the 18th, and then the 23rd as well. It's going to be an interesting week or two.
Everything leading up to that is going to be interesting.
Yeah.
For those of you that are unaware, there was a flash freeze back in August of 2013, in which case, the NASDAQ exchange closed down about 3.5% during that time. This was a single day on the Dow on October 3rd, 2013. This was at the time when congressional leaders and President Obama were failing to produce a breakthrough in the 2013 debt ceiling crisis. Thursday marked day 3 of the government shutdown, and Washington gave no sign of preventing a fourth. So Thursday's losses also meant the Dow and S&P 500 dropped for the 9 of the past 11 trading days. So again, here that was only on in the very beginnings of the debt ceiling crisis in 2013, and already the S&P and the Dow had dropped heavily for the 9 of the 11 days preceding that as well. This is in August. Go back here for you guys. The August's issue was more of a flash crash, just for those of you that are unaware, because of communication errors, electronics errors. It was not great. Trying to pull up your stream over here. Yeah, Evergrande, the investors of Evergrande were planning to sell their most expensive building, $1.9 billion. But the state funded association that was going to buy it completely backed out of the deal, quote unquote, due to quote unquote mismanagement of Evergrande accounts. So October 18th, Francisco, tomorrow, Evergrande defaults on their other bond, don't they?
Yeah, I think on Monday they will declare them on default.
On Monday?
Yeah, it's between the 18th or the 19th.
The 18th is tomorrow. I'm sorry, the 18th. Yeah, that'll be a day ahead for us. So they may not declare it till the 19th.
Yeah, because it's Monday.
Absolutely. Christopher Dunn asks, will the $480 billion be seen in the daily balance of the Treasury? Yes, it will. But people need to understand that in order for the government to get that $480 billion, they have to sell mortgage-backed securities and junk bonds, which is what they're doing. So, actually, no, that's a bit of a misstatement. They are doing that in addition to it, but that's pretty much all they've got left, aside from getting the $480 billion from the Federal Reserve. Excuse me for misspeaking there. So what you're seeing here is just one of many catalysts that we're seeing for the debt ceiling. And people need to remember not to get dates, stuck in their head or to dwell too much on them. You need to be aware of them and prepare yourself for them in consideration of the possible mother of all short squeezes, in my opinion. Which is what I'm doing, which is why I've been keeping an eye on this so closely. Because when the stock market loses a lot of value, junior hedge funds get margin defaults, and then senior hedge funds get margin defaults when delta hedging and gamma squeezes occur due to the junior hedge funds having to sell off their assets and buy back their shorted stocks, shorted positions to close out, to bring themselves back into good standing with DTC in their margin position. So that will be kind of the way, in my opinion, that the mother of all short squeezes could kick off. And then senior hedge funds will also get margin called and default, and that will cause other broker-dealers to get margin called and default. That will cause some prime brokers to get margin called by the DTC as well. And we could see some defaults there. So we could possibly see prime brokers and even market makers, if the mother of all short squeezes really does take off, all getting margin called, and that would bring many billions of failure to delivers that are currently being hidden in holding companies overseas in my opinion, to be closed out. And I really believe that I'm going to be so goddamn fucking rich off of AMC and GameStop. And I bet a lot of other people are too. I think we're going to be so fucking rich. Holy shit.
Well, once the smaller ones start falling, then you're going to have the larger ones. It'll just be cannibalizing each other at that point. And you're going to have people sitting on the periphery like BlackRock that are just waiting to swoop in and grab these at a fraction of the cost. So.
Absolutely. It's going to be nasty out there. I feel sorry for those using ComputerShare as well. Sorry.
They were warned.
They were warned. That's true. You know what? What happened to the stock market during the government shutdown of 2013? All right, in 2013, there was a back and forth that occurred. Oh, hang on one second. Let me close that out. Because Forbes is being a bitch. So. And throwing gigantic ads on top of me as well. Thanks. Appreciate that. So what happened to the stock market during the government shutdown in 2013? There was a battle between the House and the Senate leading up to the shutdown from September 20th through October 1st when the funding ran out. The stock market peaked 2 days before the House bill to defund healthcare was passed on September 20th. It was at all-time highs. Does that sound familiar to today? The back and forth between the House and Senate when the Senate passed the bill removing the healthcare measures. This was also the day that the S&P 500 average daily moving average moved below its WMA. This was rejected by the House and funding ran out on October 1st. The SPY bottomed out 7 days later, and by the time funding was restored on October 17th, the SPY was well above the lows and the closing price on October 1st. From the SPY high on September 19th to October 9th low, the SPY lost 5.2%. By the end of 2013, again, it had gained 12.8%. So people just bought it right back up afterwards, but not before a majority, or you should say a good portion of Americans lost a lot of money, as we've shown in reports from the federal government themselves. The difference is, in 2013, our economy was very strong. We didn't have COVID. We didn't have a supply chain crisis. Our president wasn't being nicknamed Empty Shelves Joe. We didn't have a real estate bubble the way that we currently do. We didn't have $426 trillion in total derivatives in these banks and holding companies. We didn't have hyperinflation setting in because the government printed 2/3 of all 33% of all money in history of the world back in 2020 alone. Let that sink in. The government printed 33% of all money in existence in 2020. 33% ever. So, man, Kenna, you think you're going to fucking love this. What the fuck happened in 1971? The last remnants of the gold standard were abandoned in August 1971 when President of the United States, Richard Nixon, decided to eliminate the use of gold. He basically closed the gold window where foreigners couldn't redeem dollars for gold at the Treasury. And previously from 1945 until 1971, the U.S. dollar was backed by gold and served as the world reserve currency under a system called Bretton Woods. We're going to move into a completely separate section here that is of this due diligence that is directly correlated to what we're seeing today. What the fuck happened in 1971? The Nixon shock, as the unilateral suspension of Bretton Woods is referred to, brought about a major change in economies and societies around the world. From that moment, the moment of the Nixon shock, all national currencies stopped having an anchor to gold. So fiat currencies could be created endlessly. Endlessly. That is what began what we're seeing today in the terms of hyperinflation, $426 trillion in derivatives, a $1.6 trillion repo market used every single day by the top banks and by currently 96 counterparty banks and the Federal Reserve in order to prop up the stock market, because they have absolutely no faith in their junks 3-month government bonds that are yielding 0.05%. What you see here is the changes in productivity and hourly compensation. People have been required to do 246% more work for only an increase of 115% of compensation. That all changed starting in 1971. This is the real GDP, real wages, and trade policies in the U.S. Real GDP per capita, right? The gross domestic product per capita increased exponentially. Per full-time equivalent worker, the average real wage started decreasing at the level that it was going. The average real wage, when accounted for inflation, was decreased even further. And the real median weekly earnings of full-time workers, take-home pay, has not changed since 1980. This all came about due to the removal of gold as an anchor to the fiat by Nixon. What do you think, Kenna?
Well, part of that was France calling our bluff too. Is why we got taken off the gold standard.
Yeah, that's a great point.
And then here they are calling our bluff again. History repeats itself.
Ain't that true?
No, I mean, it's ridiculous. And I saw someone ask why they haven't been regulated since '08. It's because, as we know from what I've been researching, if you guys have been following any of my tweets, they've all been bought. They're bought by the hedge funds. They're bought by the big banks. They're bought by the CEOs.
Absolutely right.
So, I mean, why would they eat into their profit margins?
They definitely are not going to want to do that. I agree with you there. Let's put this over here so people can see it a little bit better.
Yo, bossblunts, I have to leave, bro.
All right, Francisco, thanks for being here with us. Appreciate you.
Take care,
Everybody check
all
out
of you.
at Francesco0996 on Twitter. My man, he's always doing some great due diligence. Have a great evening, brother.
Take care, man.
This is income gains widely shared in post-war decades. 1970, income gain was raising steadily, and then everything just dropped for the 20th percentile. Again, that's hardly increased at all, while the 95th percentile has increased much, much more. Taking a look at the top 1% of earners and the bottom 90% of earners, look at 1971. The bottom 90% of earners held the majority of income growth. And that completely shifted when the artificial printing of money occurred. And now the top 1% of earners see the majority of income growth. That peaked at 2012, I guarantee you. That's much higher at this point. This is from the U.S. Bureau of Economic Analysis from 1970. It's the relentless 50-year decline in wages share of the economy's total income. Straight drop. The share of the economy's total income. We get nothing. The share of it has gone down towards the 1%. Income share to top 1% relative to the bottom 90%. Top 1%, top 0.5%. In 1971, started increasing exponentially. This is share of total before tax income flowing to the highest income households, including capital gains, from 1913 to 2017. And it all changed in 71. Average black income as a percentage of average white income was increasing quickly through 1971 and then stagnated heavily. Real GDP per capita and median male income. 1971, the real GDP was steady with median male income. The real GDP has grown at the same rate, if not more, and median male income is actually down from where it was in 1971. That's a fucking shame. Median female income has increased, but unfortunately not anywhere near as high as real GDP per capita.
Well, here is I just pulled up the minimum wage. So 71, it was $1.60 minimum wage. 74, it went to $2. 75, they were gracious enough to give another 10 cents to make it $2.10. They were really, really gracious. And 76 with $2.30. 78 went $2.65.
What a wonderful raise.
$2.90, $3.10. 335, 380. 91. We
that
got
was the minimum wage. 425.
425 in 1991.
And you know what's sad is that currently a lot of people that work for tips, like bartenders and servers, make less than $4. $2.
Yeah, it's $2.13.
Yeah, I know. I would know. I did it too.
97 was $5.15, and then we waited 10 years into 07. For $5.85, they 70 cents. Damn, it's amazing. 08, $6.55, and 09, $7.25, where we currently sit, unless states change their own minimum wages.
In 1971, you could buy a new house for $25,200, a new car for $3,500. You could rent a house for $150 a month, on average. Tuition at Harvard was $2,600 a year. A movie ticket to AMC was $1.50. Gasoline was 40 cents a gallon.
Man, that would be great right about now.
Yeah, no kidding. And fresh baked bread was 25 cents a loaf. Hamburger was 62 cents a pound. Wow, look at that.
Oh, you mean it wasn't $2.50 a loaf?
No, it was not. That's the cheap bread too, right? All these stupid, artisan breads are now, $5-6 a piece. Hey, Doe. No, brother, I'm not into crypto. I did play crypto before AMC and GameStop, then realized that I personally could make a lot more fucking money in AMC and GameStop. So I sold all my crypto positions and invested myself accordingly.
I have crypto.
I sold a shitload of Matic and other things that I was doing very well on. But yeah, there's nothing wrong with it. That's just me. Kenna, I'm glad you're in it too. I'm going to play it again here when I get done with the MOASS. But for now, no, not touching it.
I actually like playing with my cryptos. It's like my fun weekend money.
Oh, absolutely. That's a good point, right? Your weekends. We all know what's going to happen on weekends with the fucking pump and dump from, market makers.
That's exactly it. That's why I kept my crypto, so I could trade on the weekends and still make money. Take some of the profit, put it in AMC. Yep. Rinse and repeat.
For those of you that are unaware, this is cumulative inflation from 1971 to 2015. It was 300% in 1971, and it is now at 2,000. It was at 2,300% in 2015. That's from inflationdata.com. Consumer Price Index in the United States. 1971, it was around 5%, and in 2012, it was almost 30%. Electricity, food, and fruit from St. Louis Fed. There you go, 71, 2021. This is all directly related to the fact that Nixon pulled the fiat away from gold as an anchor. And this is what leads to inflation. And when you have supply chain issues like we currently do with low supply and high demand, and not enough people at work because only 58.4% of Americans are actually working currently, that puts a lot of strain on the value of our dollar, and that creates hyperinflation. That's why you're seeing it everywhere that you go, especially the grocery stores.
Once we start hitting 40%, that's when I'm gonna start getting really worried. Like 40%.
Well, that's
like
where I'm at
across
with
the
used
board.
cars. Oh,
Yeah.
across the board, yeah. Sure.
Across the board. Like
I think it's
50%
there.
is tech.
I think it's there. Have you seen the price of meat in your local markets?
I have.
Isn't that crazy?
Well, did you not see my picture that I posted of
Yeah,
the chicken wings?
the thing was like that roll of meat that was like $326, and it was just like prime beef. It wasn't even like Wagyu or anything like that.
Oh yeah, I mean, I saw that picture. That wasn't mine. I took it
Oh, sorry.
at Sam's. It was $25 for a thing of chicken wings.
Oh fuck yeah, jeez, yeah, chicken wings. There ain't
You
chicken
need
wings
to
shortage
cut it.
nowadays.
I'll tell you what, I can get a truck up to you from Texas real quick.
I don't know about that right now, man. It might take me a little bit, but I'll find a truck for you. No problem. We'll find a reefer.
I'm telling you, the cost of meat is even in the worst of times has been okay here. You know
Right.
what I mean?
Right. Okay, right, because there's so much beef in the area being Texas.
Yeah.
Look at Australia total
Yeah.
mortgage payments. Don't think this is just America. This is worldwide. Australia, 1971, 2018. Percentage of household income over 25 years for Australia, Sydney, Melbourne, and the entire country. Completely elevated. Official U.S. gold reserves, flat as hell, while gold price continues to go up. While the Chinese continue to buy. Hyperinflation episodes we were seeing heavily, for weeks in the 90s. And I think we're going to see it a lot more currently. I'll skip that one for you. That's not worth it. This is the share of countries with annual depreciation rates greater than 15%. All increased in 71. This was Napoleonic Wars. This was increased in 71. Currency crashes. The depreciation of all major currencies in relation to gold. As you can see, this is the 20s. The Mark, the Reichsmark, the Deutschmark, the Euro. Okay, this is the yen. The number of countries with banking crises. Surprise, surprise. Federal debt percentage of GDP, 1971. What do you see? Look, even in World War I, the Great Depression, the World War II, we were able to bring it back under control. And now it's just exponentially higher. And we're looking at 2050 projected into 180% federal debt percentage of the gross domestic product. Is the gross federal debt held by the public as percent of the gross domestic product right now? What does that mean exactly? The U.S. debt limit is currently $28 trillion. The debt per person is $86,000. And the debt per American taxpayer right now is $229,000. The United States debt per taxpayer is $229,000 and growing every day. That's why they're fighting about the debt ceiling.
So here's a funny thing. So the USD was created in 1908.
Yep.
I was doing a inflationary. So from the time it was minted to now, $1 in 1908 is worth $29.82 today.
Say that again?
So if you had $1 in 1908,
Yeah.
it would be the equivalent of having $29.82 today. So from the time it was created to now.
That's huge. Talk about inflation, huh?
Yeah.
So that's why we used to be able to buy a house for $25,000 in 1970, right?
So it's literally worth like 3 cents.
That's nuts.
Sorry, fun fact.
I love it. I love it. Look at the national debt from 1900 to 2020.
thought that was AMC's parabolic move.
All right, it's GameStop. It's AMC. No, wait. It's the U.S. national debt. Fuck. But look at how steady it was all the way through 71. And then just get out the money printer, you know? And now we're way up here because we're 28. This 28's way the fuck up here. 28 trillion. That's where we're at. U.S. monetary gold tons. External dollar liabilities. Liabilities, expenses. Official external dollar liabilities, expenses. That was from 1970 to 1975. That's funny. And look at how flat that was prior to that. Yeah, it was increasing slowly. Federal deficit surplus. What surplus? What surplus? Same shit. How many graphs, how many government entities do you need to see it from? One of my favorites, the S&P 500 PE, right? Price to earnings ratio, way too fucking high. When you account for inflation, the Shiller PE, every time this is high, it means that that everything is overbought, way over fucking bought and overpriced. That's why in 1929, during the Great Depression, that fucking crashed. That's why in 1971, it increased and then it crashed.
Wait, are we really
Hard.
sitting at a 45 right now?
Yes, we are. The Shiller
Jesus,
PE
that went
ratio, 2000, the dot-com bubble was up here because it was overbought to shit. And it crashed hard. Right? And it crashed just like the stock market crashed. And now we're at the highest level we've been since the dot-com bubble.
Yeah, so we're between a 38 and 45 right now.
Yes,
That's
we are.
retarded.
Yes, we are. It just depends on if you're looking at the S&P 500 or just the Shiller PE ratio.
Yeah.
Yeah, right here you go, guys. The Shiller PE ratio, all right? Price earnings ratio is based on average inflation-adjusted earnings from the last 10 years, known as the CAPE, cyclically adjusted PE ratio, courtesy of Robert Shiller, the Nobel Prize winner. All right? This motherfucker knows his stuff, knew his stuff. I think he passed away. Again, see, the higher this is, the more likely we are for a market correction or a crash. This was Black Tuesday. It was at a 30 in 1929. This was Black Monday, all right, in 1989. This was the 2000 dot-com bubble. This was a 2008 market crash. This was
87.
Sorry, you're right, 87. My apologies. This was the 2008 market crash here with the issues that we had at the time, which are compounded times 10 at this point. And then here you've got the 2013 debt ceiling crisis right here. But now we are way oversold, even still, sitting at a 38 on the Shiller PE ratio. Now you got to look at the S&P 500 as well. And that's at a 28.16 currently, which was up 0.75% on Friday alone. Right, so it's taken a turn back up. It is at its fifth highest of all time as well.
Here, I've got something for you to show, and it'll kind of break down the history of all this.
Go ahead. Check out the 10-year Treasury rate. This was 1971, and the artificial printing of money brought that up here to the early 1980s, and we've been on a steep exponential drop on the 10-year Treasury rate ever since 1981, 1982. This is the Black Monday crash of 87 again. And you can see every time it's bought back, it comes back up. It keeps exponentially going lower. There's no remedy to this by artificially printing money. There's no remedy to this by bailing out banks. It's up 7 basis points, which is not shit. It's at 1.59% currently. And the reason it's up is because it was hurting due to the debt ceiling issues we were seeing in September and October. This is the yield for the S&P 500 dividends. It's garbage. Which one is it in, Kenna? I got it. Thank you. History repeating itself again from the Bull House. Check them out on Reddit, YouTube, Twitter, everywhere you go. They even got a magazine. Check out the Bull House. Another deep dive from Kenna. This is awesome. Tell me about it.
So this was literally like patterns. You know
Oh
me.
yeah. We're about to
And
hit 100-year fucking depression, or should I say downturn
so yeah,
in
yeah.
economies?
So I had gotten thinking months ago. We're in the 2020s. We knew that the Great Depression was in the 1929, mainly the 1930s though. But 1929 was the Great Depression. And so I was like, okay, what happened in the 1820s? Sure enough, there was another. It was the U.S. first Great Depression. 1720s was the South Sea Bubble, so that was another financial crisis. 1620s was another economic crisis, all the way back to like I think it was like 1520s was something in Europe as well, but 14, 13, 12 there wasn't really anything. But 33 AD with Julius Caesar, and so this led Hambone to telling me about the fourth turn that he had been looking into, which I don't know if you've actually heard about that, but that's an
You showed
interesting.
it to me. I went out and looked
Yeah.
into it because of you. Yeah, thank you.
Yeah, so the fourth turn, so every 20 years is a different turn, and so we're in that fourth turn, so this is like the crisis turn. So we should only have like 7 more years left of this until it gets good again. But this was just, showing like the history and how it happens and tracking everything and the historical charts of the NASDAQ, the Dow, and the S&P 500, and you can see even on my charts that I posted, like these major run-ups, and it just shows all the crashes. Like every time it was just on these massive bull runs, it would crash. And so,
Yep.
if you scroll down even more, there's the
100-year historical chart for the Dow Jones.
yeah.
Look at 08. Oh, that's pretty. 2000, 08. Gee. All-time highs seem to have a good time every time, right?
So then I got further into these charts and doing the comparison of the Dow Jones and the NASDAQ. Whenever they separate, before I even really started looking into it, I saw this divergence. I was like, oh, every time they diverge from each other, there's a recession or a crash. And so then I went looking, and sure enough, there was an article on MSN.
Dow Jones versus the NASDAQ. I see.
Yeah, the Dow. And they had actually reported the Dow and the NASDAQ are diverging. Why that's a honey for the stock market bears. And so it is actually an indicator that when the NASDAQ and the Dow start diverging from each other, separating and not following each other, it does indicate a downward trend in the market. And then the S&P 500 earnings, anytime the orange line and blue line tend to cross. Well, when they cross, when the orange line and blue line cross, so the earnings versus the S&P, there's another recession. That's another recession indicator.
Yep.
And so like you can see that with the dot-com bubble, you can see it with 08 and
Here in 2000.
December of
Here in
2019, they actually crashed. They actually crossed again. And so therefore, yeah, I was basically like, oh,
Here we go.
they're going to start going down.
That combo in 08, yeah. The Great Depression. Holy shit. All right. What's this one here? Very cool.
Yeah. So I showed the Great Depression and how they basically it indicated it every time. So there's
and again,
this
take a look at what happened to the CPI in 1971. There you go, straight exponentially higher. It was currently on this path, and just what a big jump. Consumer price index is out of control. Whoops. There we go. Let's see how things were. Oh, yeah, May 2021. Of course, yeah, we know, autos were up, 47%. They're still up like 35%. Wow. Okay. That was great. Thanks, Kenna. Thanks for showing us this. Make sure you guys check it out on Reddit from the Bull House.
Yeah,
You can
no
just
problem.
smash it in there. Let's see, where were we? Right here, real quick. There's not much left here, but I just wanted to run you guys through real quick if you still wanted to hear it. And where the fuck are we? Working hours to buy the S&P 500. This was the average hours that used to work cost. Just be this is 30.9 hours on average right here. This is how much it costs now, as of 2020, I should say, hours to buy the S&P 500. Almost 120 hours. Right? How long does it take to save for a house? 1970s, it was 2.5 years of saving up an average income that was required to buy an average house. Now, in 2020, 2021, that's over 7 years of saving up to buy a house. What does that tell you guys? It all directly correlates to separating the fiat from gold in 1971. Speculation versus production. This was industrial production. This was 1971 volumes of futures trading due to the fiat no longer being related to gold. Market capitalization, resources decreased, financials increased. Personal savings rate, 1971. How much Americans were able to put away in the bank or savings went down from 10 to 16%. Practically currently today is under 2%. I've showed you that in previous videos. Net savings as a percentage of gross national income from 1971 through 2021 has decreased, sadly, almost to zero at this point. You can see it here back in right here around 2020. This was at 2.5%. Trade balance, merchandise trade was fairly equal as a percentage of the GDP up until 71, and it has significantly decreased. Right, goods trading of goods from 71 as a balance to our economy down 8,000. Great, I don't even know what the fuck that means. 8,000 what? Cost of barrel of oil in nominal terms, is now at $83 a barrel. So this graph as of today, this number should now be up here where my mouse currently is, around $83 a barrel for oil. Interest rates since 3000 BC, the year 3000 BC, interest rates were around 20%. And in 1970s, 1980s, they were at the highest they were back since 3000 BC and have dropped exponentially ever since. Government bond yields, 10-year, including benchmarks. Oh, I went the wrong way. Sorry, people.
I think they're wanting a link to the site that you're on in chat.
Oh yeah, I'll give it to them. Thank you. Got to open it in a web browser to drop it in for you guys, though, just so you know. Long-term government bond yields for Japan, United States, Germany, France, UK are down heavy. I've shown you that German bonds are negative. Japan bonds are negative. Australian bonds are nearly negative. Euro junk bonds are negative when you account for inflation. American 10-year yields are at 1.5, and the three-month yield is much, much worse, 0.04. This is energy consumption per capita in the United States from the basically from the 1800s up until the 2000s. This is actual, blue line is actual energy usage. Real GDP per capita compared to energy use per capita. World per capita energy consumption. Nuclear consumption is up at record highs, whereas biofuels is at record lows. It's a sad time for our world. Ideological positions of the major parties. More conservative, less conservative. Do you wonder why the fuck they came together in the 70s and then broke apart so hard again? From the period of the, basically the 30s through 1970, our government was very aligned and things were actually happening. up until our fiat was separated from gold. It's great. Analysis by Kansas State University shows that political speeches now use simpler language and express more sentiments. They give you more opinions and easier to follow language because they're dumbing it down for the average American.
Speaking of dumbing down, another fun fact, did you know that music lyrics were read at a 4th to 5th grade level back in the 90s, and now it's at a 1st to 2nd grade level?
That's pretty sad, huh? The American music programs are being completely abolished.
Like, it's really interesting, like, if you actually, like, read the lyrics from, like, the early 90s and stuff, like, how intricate and, you know, the bigger vocabulary and everything that they used versus, like, lyrics that you hear today in just mainstream songs it's very fascinating. Like, or if you, hell, go to, like, the 70s, think of, like, Queen and like, Beatles and all of those bands, you know, any of these bands, like, they use
high
so many
level
different
of music.
words. Yeah.
Absolutely.
Amazing.
Absolutely right. Look at what happened in 1971. For those of you that are curious how this relates to the stock market, this is the number of pages in the Federal Register, right? All those documents you see from the SEC and the NSC and DTC. This is the number of pages that had to be implemented to deal with all the crazy new amounts of derivatives and bullshit that is allowed in the stock market. As of 1971, that number went from around 20,000 pages to, you know, over almost 100,000 pages, you know, and now I'm sure at this point way over 100,000 pages. So they had to implement more filings and regulations in order to handle the new derivatives that are being allowed to be created in the financial markets. So they're completely abusing the shit out of it, and the SEC cannot keep up. This was cloture voting in the United States since 1917. They almost never had to use cloture motions in order to be able to pass to get past the requirement for 60 votes and make it a simple majority of 50. So that highly increased in 1969, 1970, and just kept on rising. Cloture on motions, votes on cloture, and the number of times cloture was invoked. Now, previous to 1970, you know, being very well off financially was rated pretty low by most Americans, and developing a meaningful philosophy of life, helping others, raising a family, and becoming an authority in their field was pretty high. As you can see, that changed in the late 2000s, or basically immediately after 1971, and in the 1980s it completely switched to the point where developing a meaningful philosophy of life and becoming an authority in their field are not very important, and helping others who are in difficulty, raising a family, and being very well off financially are much more important, because there's much fewer people that are well off financially and more people that want to be, right? So that becomes very important. Inflation adjusted per pupil spending. Holy shit. This is spending. These are scores for reading, math, and science. This is staff per student. So staff per student is decreasing, spending is increasing, and test scores are also decreasing. That's fucking sad. So the number of lawyers and population per lawyer started increasing heavily in 1970s. Incarceration rates, jurisdiction, you know, federal jurisdiction per 100,000 people. 1971, males, the overall, and females, they're all up. This is how many young adults, percentage-wise, live with their parents. In the 1929, it was 48%, percentage of 18 to 29-year-olds living with their parents. In 1970, it was 31%. Right? Even in 1960, it was 29%. And as of 2020, it's 52% of people between 18 and 29 are living with their parents. If this is not a sign of economic turmoil and depression that is upon us already, I think you are living with blinders on.
Well, and what's really interesting about that, so I'm fairly certain Hambone's grandfather was a prophet. Like he passed away in 2012, but he would say things like, in the next 10 to 15 years, you'll see multiple generations living under the same house, and it won't be because of want, but more of necessity. And this was, 2010. He told Hambone in like early 2000s this when we were kids, but the fact that he told him that before '08 even happened.
Yeah, that's pretty impressive.
It's crazy. It's just crazy. I mean, there's many things that he said and whatnot, but that one just stuck with me.
This was the median age that people were first married back in the 70s was around 22 to 24. And now is between 28 and 30 because a lot of people can't afford to get married. Divorce prevalence by age. It was less than 10% of people were being divorced in the 70s. And now it's up to over 25% of people in certain age groups being divorced. Percentage of children born to unwed women increased exponentially. What else? Obesity in 1971 started trending much higher in everybody because financials became the most important thing. Profits. National health expenditures compared to the U.S. population. You see the U.S. population increased steadily, but national health expenditures started increasing exponentially. Again, a parabolic arc. What are you going to see? This just continues. Just follow this. You can literally just keep on going up, and that's what's going to happen. This is just going to keep going up. Growth of physicians and administrators. Healthcare became big business. Pharmaceuticals is big business. COVID is big business. COVID is big fucking business, and that's it. I don't care what anybody has to say. It kills a lot of people, sure. But those numbers are significantly inflated. And I'm sorry to say that majority of people are buying into what is actually happening. I'm not saying it's not dangerous. I'm not saying it doesn't kill people, because it does. And I've had my family and friends, extended friends and family affected. But I even smoked marijuana with somebody who had COVID for 3 days. And the day after, he got a call from the person from whom he got COVID, called me and told me immediately. I took 2 COVID tests. My wife did. My kids did. None of us got it.
So it's interesting that you said that about COVID, because I actually have that in my mind map. New vaccine billionaires gain wealth as Moderna BioNTech shares soar. BioNTech created $4 billion in added wealth for its CEO, and 2 early investors in BioNTech twins added $8 billion to their net worth, and the Moderna CEO gained $4.8 billion in wealth. That's
a lot of money, but from pharmaceutical companies that are making a shitload of money getting paid from the federal government to distribute these shots and pills, regardless of the actual how harmful the virus is. It doesn't change the fact that they're making a fuckload of money off it. And by saying that it's more dangerous than it really is, hospitals, doctors, pharmaceutical companies, governments, people invested in them, hedge funds, and market makers are all making bank off of it.
I posted the link in DD if you want to put it in the chat for them.
The new vaccine billionaires gain wealth as Moderna and Pfizer shares soar. The surge in shares of BioNTech has created $4 billion in added wealth for the CEO of BioNTech. 2 early investors of BioNTech have done even better, making $8 billion of their net worth this year. Moderna CEO has gained $4.8 billion this year, giving him a net worth of $5.3 billion. So he gained 90% of his wealth this year alone. Right? This is real issues. The soaring shares of vaccine have created a new wave of billionaires, plain and simple.
And note the date, December 9th of last year. December of last
year. December 9th
so
of 2020. Yeah. So, excuse me. So it was last year. Yeah. And I'm sure that's only increased even more since 2021. That's great. Thanks, Kenna. Appreciate that.
Okay. This is why that's why I've put them on the mind map with all of this and seeing,
Good point.
following the money.
It all matters, you know? I'm not saying it's about microchipping, Mark. I'm just saying that it's big fucking money. So even though it's something that's deadly to people that have pre-existing conditions or weakened immune systems and other factors, it's not so bad for the majority of people, including that friend that I smoked with. He was sick for a week and was all better and only missed 3 days of work. You know, it's just one of those things. Let me see here. So this is from whatthefuckhappenedin1971.com. All right. Fantastic website. There's a lot more information on there that I'll share with you guys in the future, and you guys can check it out. I dropped links in the chat. I just want to end this with a little quote that they left because the creators of WTFHappenedin1971.com are onto something here. And this is from F.A. Hayek in 1984. He said, I don't believe we shall ever have a good money again before we take the thing out of the hands of government. That is, we can't take it violently out of the hands of government. All we can do is, by some sly, roundabout way, introduce something that they can't stop. And if you ask me, they can't stop the fact that they have $426 trillion in total derivatives, the majority of which are notional unrealized values, rehypothecations of bullshit. My best hedge in the current market is AMC and GameStop. And I think that's the same thing for a lot of other people. And I think we're going to be filthy fucking rich. That's all I got to say about that. Because that's truly how I feel. I think we're going to be absolutely filthy fucking rich. This debt ceiling crisis.
I want my fucking money.
This debt ceiling crisis is something that's going to, in my opinion, probably lead us there. Because everything that comes right back around to the fact that they can't get it done. And there's just not enough time to get it done before it causes a stock market crash. So on that note, I want to wish you all peace and wealth. I want to thank Kenna and Silverback64. Check them out on Twitter and on YouTube. I'm sorry, on Twitter and Reddit, other places as well. The Bull House especially. Kenna, what's your Twitter username? People are asking me. What's your handle?
I've put it in a few times. It's a
All right,
_ the real Kenna _.
Okay, for those of you that are on like Spotify, _ the real Kenna _ and Silverback64. What's yours? What's your Twitter handle, brother?
I don't know.
He doesn't even know.
I have no idea. They fucked it up. Like what I actually put in, it was almost backwards.
Oh, they changed it. That's true. That's true. But still, I think that there's no way that we get out of this fucking debt ceiling process or reconciliation process without the stock market completely collapsing, as well as the real estate market, the supply chain issues that we're having. When you combine it all together, and the current hyperinflation and unemployment that we're seeing, sadly, it's the worst thing it's the worst state I've ever seen this country and this world in. And a lot of economists are predicting that this is the end of a 100-year bull market and the beginnings of a 100-year bear market. So because of that, I've hedged my money on AMC and GameStop, as well as my other businesses. And I think that we're all going to be filthy fucking rich. Plain and fucking simple. Gary Gensler, I want my fucking whistleblower money. Ken Griffin, I want my fucking MOASS money.
Gary Gensler,
Kenny, I don't want your blame.
I want my fucking money.
Thanks for coming out. Appreciate all you. Thank you, Abe Nation.
Gary Gensler,
Hit the like on the way out. Please share it.
money.
Appreciate y'all.